Good evening, ladies and gentlemen. I'd like to thank you all for being part of Max Ventures and Industries' first earnings call. My name is Sahil Vachani, and I'm the CEO and Managing Director for this company. Before proceeding with the performance highlights, I'd like to introduce my colleagues who are with me on this call. I have Nitin Kansal, CFO of Max Ventures and Industries, Ramneek Jain, CEO of Max Speciality Films, Arjunjeet Singh, COO of Max Estates, Ashish Singla, who heads our Max I, which is the investment vertical, and Rohit Rajput, who heads Human Capital and Strategy for Max Ventures and Industries. Given it's our first earnings call, I would like to take you through our short but eventful journey so far. Many of you would remember that we were founded in 2016 as a result of the demerger of the erstwhile Max India. Max Ventures was formed with just Max Speciality Films as its subsidiary. In the same year, we came up with the concept of exploring wider opportunities in the world of business. We called Wider World of Business Opportunities, WWOB, for the Max Group, and we decided that we would do this under Max Ventures. In early 2017, we decided to enter the real estate space, primarily because we believe that there is a significant lack of trust and credibility in this space, particularly in the NCR market in India. This, coupled with the strength that the brand of Max brought to the table, we believe will make a very compelling proposition to consumers and to all stakeholders. More so, over the past many years as a group, we have had experience in all activities of real estate and have since brought the entire teams within the various functions together to form Max Estates. In 2017 itself, we brought in New York Life as a private equity investor in Max Ventures and Industries. They hold with a 23% equity participation. In the same year, our packaging films business decided to embark on a significant expansion aligned to our aspiration of becoming a specialty films company, and also brought in Topan Printing Company from Japan, that is a technology leader and global converter, for a 49% equity in the OpCo of Max Speciality Films. Max Estates started 2017 with its first residential project in Dehradun, known as 222 Rajpur, which was a boutique development of just 21 villas. In the same year, we undertook the development of a project known as Max Towers in the Delhi 1 campus. For those of you familiar with the geography of Delhi, it is strategically located on the Delhi-Noida Expressway. In the same year, we also incubated Max I and made some investments in two companies, which is Nykaa and Azure. As we got into 2018, we decided to consolidate our growth aspirations in real estate and have not only completed and handed over our first development, which is 222 Rajpur, but also are chugging along very quickly in terms of completion of our first office project called Max Towers in Delhi 1. We have also started development on our second office space development in Delhi, in Okhla, which was the erstwhile Max House. We are now looking at an interesting cusp where this year we're looking at newer opportunities in the space of real estate, particularly to grow in the office space segment. 2018 was also a very important year, and particularly the last quarter for Max Speciality Films, because the investment that we had commissioned a year and a half ago came into play and our capacity came on stream, thus almost doubling our capacity and taking it up to 80,000 tons per annum. While I take you through the highlights of the first quarter, I'd just like to state that we are still in startup mode as an organization. We are very young, so it's a startup within the umbrella of the Max Group. Developments, particularly of the last quarter, have been that the rights issue, we had a rights issue for 450 crores. Delighted to share that has been fully subscribed, and sponsor shareholding has increased from 38 to 47%. These funds will primarily be used to grow, in particular in the office real estate space. Our marquee investor, New York Life, has kept their equity at the same levels and contributed to the rights issue as well. In addition, we've had other marquee investors also join in as part of the shareholding structure of Max Ventures and Industries Limited post the rights issue. Some highlights of the quarter. Max Speciality Films, the new capacity is on stream, and we have been able to be successful in selling all the quantities. This is significant because our quantity increase was almost doubling our capacity, and the ability to sell that capacity in a market that is quite challenged with a lot of capacity that came on stream is a great achievement for the team. The pricing of our products is still under pressure due to the bunching of capacities of various competitors that have happened in a similar period of time. We are now looking forward to driving a better product mix towards specialities, and we believe that there are significant opportunities, particularly for our company, Max Speciality Films, that arise post the ban on plastics that some states are talking about. We call these opportunities particularly from recyclability. Those were the highlights for Max Speciality Films. Just to cover some brief highlights for Max Estates, our team has displayed tremendous capabilities around project execution, particularly for our first project in Dehradun, which is delivered in time and in cost, and also having sold 50% of the inventory already. But for our office space development, Max Towers, the team has again shown tremendous capability in being able to carve this out from the Noida Authority, from the developer that was originally developing it and could not deliver it, to get a direct lease from the Noida Authority, and construction is on schedule. More so, the first anchor lease has also been signed for a large co-working company in Max Towers. And also the growth of this business with our new project, Okhla, breaking ground is a tremendous milestone for us. Our focus in Max Estates will be to focus on the office space segment, and within that, Grade A developments. We're looking to add value through curating experiences for people who are in these offices and using office space as a service model, looking at growth opportunities. I will now hand over to my colleague Ramneek Jain, who is the CEO of Max Speciality Films, to take through details for our packaging business, and then to Arjunjeet Singh, who is the Chief Operating Officer of our real estate business, Max Estates, to take us through some details there. And I'll be happy to take questions at the end. Thank you.
Good afternoon and good evening, friends. My name is Ramneek Jain from Max Speciality Films. As Sahil introduced, we are in an exciting phase of our time. We have our new line come on board, the new line 5, and with that, the capacity has been augmented from close to 40,000 to about 80,000 tons per annum. Overall industry is remaining tough, but this is where the Max Speciality Films team has been able to hold on and be able to sell the increased capacity into the market. The product mix has been a dynamic approach that we have been taking along with cost breakthroughs and kaizens to support our bottom line. In terms of overall financials for the Q1, we have been able to hold on to the last year Q1 despite the tough market. And the full impact of Line 5, which came on board in the middle of the first quarter, will show more promising contribution towards the Q2 overall. Just a little bit more about the Line 5. We doubled the volume, as I said. It's an 8.7 meter wide 5-layer BOPP line. It's been largely designed for thicker films, touching close to about 80 microns, which is also a unique feature of the line. But most excited about sharing the machine and method innovation that we brought in with this line with regards to the inline coating feature, which is the first of its kind in the world and in the BOPP segment. And this is really exciting because we put forward our approach to bring in this new machine feature as well as a method feature, and we have been very successfully been able to deploy this. This brings in enhanced process capabilities, process efficiency, and also cost improvements, and thereby making us in a unique position to offer this value proposition to our customers. It times very well with regards to the recyclability requirements coming along in the market, It helps us to offer monolayer structure, high barrier films, also print receptive films, and as I mentioned, thick films being one of the requirements coming in with the plastic regulations coming in the country. It is also enabling us, the new line, to get into the label market, whether it's a pressure-sensitive label, in-mold label, or wraparound, along with this thick film capability and the label. It's operational, it's ramped up well, so all in all, a strong launch of this Line 5 with more promises in the coming quarter. Also with this, we have already several patents which are in the process in various stages of filing and some more to protect our intellectual property. Overall, as I said, the innovation is a strong hallmark of our approach, and happy to share that we have successfully conducted our trials on the BOPE, that is bioactive polyethylene, trials in a plant, which is again the first for the industry in India. And this again is a game changer for recyclability, which it enables us to replace polyethylene and thereby offer a 3-layer structure reduced to 2-layer structure, again, a much desired feature in the market, and we should be propagating this more in times to come. Also, our high barrier metallized film can replace aluminum foil, and that is again a strong movement in the recyclability approach, and this has also been commercialized with some key preferred customers. Overall, quality remains to be our stronghold, and happy to again share that we are the only ones in the BOPP space in India which have a quality lab which is NABL accredited, and we share it also with our supply chain partners to work on testing and building the quality standards. Overall recyclability, we are working on a multi-pronged approach and want to be there with our customers at this time, and also offering products on the product side as well as on the waste to energy side. As I said, we have products which can replace aluminum foils, which can go into a monolayer structure, and also offers layer reductions to enhance basically the recyclability portion. Overall, plastic ban, as I said, enhances our opportunity to add more value and bring overall solutions to our brands and our converters. So overall, we are poised for Line 5 maturing in the coming quarter, as well as offering more, especially the specialty products to our customers and supporting them in their endeavor on recyclability. With that, I hand it over to Arun Ranjit Singh.
Thanks, Ramneek. Thank you, everyone, for joining the call. My name is Arjunjit Singh. I'm the COO of Max Estates. As Sahil mentioned, we've already completed our first project, which is 222 Rajpur, which was in the residential space. This was a first of its kind 5-acre gated community where we delivered 22 individual villas. This has been quite positive for us, given that we were able to execute the entire project within 2 years and within budget. Further, even though the residential luxury home segment has been under some pressure, we've been able to sell 50% of the inventory thus far, and are seeing a positive response from the market for the product. And of course, families have already moved in and are living there. Our focus now is on the office space segment with 2 large developments, Max Towers and Max House Okhla. Max Towers is a 6 lakh square foot development on the edge of South Delhi. Locationally, I don't think we could do any better. It's within the mixed-use campus of Delhi 1 and is located right on the DND, half a kilometer away from the Sector 16 metro station, and it has excellent access to the heart of New Delhi, thanks to all the various flyovers that have been built, as well as of course the DND. To be our marquee asset and certainly amongst the most iconic developments in the NCR. Max Towers will be delivered this fiscal year. We have already signed up, as mentioned, one of the largest international co-working players as a pre-lease for approximately 50,000 square feet. We feel that this has enormous advantages for us, especially to drive traffic, as well as to support our larger objective of this concept, which we are pioneering at Max Estates, called Work Well. More on the Work Well initiative can be found on our website, but it is a concept that will enable significant differentiation of our products now and going forward. Max Towers, of course, itself is a LEED Platinum state-of-the-art building with a distinct amenities and F&B core. I think what is also worth noting here is, as I mentioned earlier, this asset was located within the Delhi 1 campus, and the Delhi 1 campus was being developed by the 3C group. However, they were unable to complete this project, and there was a serious concern that the asset would be stuck with on account of this inability to complete, as well as the various liabilities that the 3C group has towards its lenders and the regulators. But we were able to develop a very unique expertise in the ability to work with 3C group, to work with the regulators and the lenders, to actually carve out the Max Towers asset from the rest of the project and thereby secure a sublease directly from the Noida Authority. This has resulted in several advantages, most so the fact that we are insulated completely from any obligations or cross liabilities of the balanced Delhi 1 project, and the ability to treat Max Towers as a separate entity and thus have direct approvals in the name of Max Towers. So as a result, we have received all the permissions due so far from the various regulatory bodies pertaining to Max Towers, be it the building plan approvals or the electrical connections, and we have also applied for the occupancy certificate, which we will aim to receive soon. On the Max House Okhla is our other office space development aimed at the Delhi market. We have just broken ground on this development. It's located in phase 3 of Okhla, and the location again is outstanding. The building is also being designed to be amongst the most distinct office space developments in NCR. So in summary, on 222 Rajpur, we will continue to focus on the sales of existing inventory. On Max Towers, we have the final months of execution left to bring the assets to the market. On the leasing side, we are happy with the current pre-lease to our co-working partners, and we intend to ramp up the efforts post-completion of the building to generate maximum value. On Max House Okhla, as I mentioned, we have just started the process of execution, so that will continue to be our area of focus. As Sahil mentioned, we are still in startup mode here in MVille, but our focus is now squarely on the office space segment, where we are developing a lot of specialization to address what we feel are the gaps in the market. Our intention will be to continue to explore more opportunities in the office space. But let me conclude here and hand it over for any questions that you may have. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Puneet Gulati from HSBC. Please go ahead.
Good evening, and thank you for the opportunity. Just if you can give some more details on Max Tower, Max House. Max Tower, is my understanding correct that only 0.5 has been leased out? 0.05 million square feet has been leased out?
That's right. Okay,
and when is it scheduled for completion?
Max Tower is scheduled for completion December 2018.
December 18. And what is your expectation of rentals from here?
Our first lease has happened at 95 rupees a square foot, and we're hoping that we want to lease out the residual of the building after we complete the building so that people can see the product that we've created, and we're hopeful for triple digits at the very least or more.
Okay. And this co-working space, is it a fixed rental model or is it a percentage of revenue kind of model here?
It's a fixed rental model.
It's a fixed rental model. Okay, great. And how big is Max House?
In total, the entire development of all the blocks in Max House will be equal to close to 300,000 square feet.
Okay. And when is that likely to be completed?
Arjun?
Sure. So we've, as I mentioned, we've just started on the first block of Max House, which is about 1 lakh square feet. I think, given that we've just started it, it's difficult to commit, but I would say about 26 to 30 months.
Okay. And are approvals fairly easy to get in this part of Delhi?
We have already got approvals for Max House Okhla, and we've already commenced construction. So our approval is for an increased FSI of 2.25. So that's how we're starting construction, only after approval.
Oh, great. So basically, the total leasable area would be, 3 plus more, or how much or will it be just 3 lakhs?
So it would be 3 lakhs in total once the entire development is done.
Including the extra FSI for which you applied?
So the extra FSI has already been granted to us.
Okay.
On the first phase which we have applied for, and that is the one which we are starting. So we call it Block A of Max House Okhla. That is, yes. So we have already received that. We've already received the.
Yeah, 3 lakhs is increased FSI.
Okay. And so how much do you need to spend in all? You probably still have to. Have you paid for its extra FSI, or you still have to pay?
We've already paid for the extra FSI for 100,000 of the square feet. For the residual 200,000 of square feet, we have not yet paid for the FSI. We will pay for that as we get closer to the building plan approval.
Okay. And is there an estimation of how much cost will be there for this?
At this stage, it will be difficult for us to share the cost of that.
Okay. Okay, great. That's all from my side right now. Thank you so much.
Thank you.
Thank you. The next question is from the line of Gautam Gupta from NRC. Please go ahead.
Hi, everyone. Thank you so much for taking my questions. Just wanted to check on the Max Specialty Film side, the partnership that we have with Topan, what kind of strategic and technology value add does this bring? Maybe if you could give us some examples.
Yeah, I'll pass on to Ramneek Jain to take that question, please.
Thanks, Sahil. Mr. Gupta, thank you for the question. So Japan has brings in our ability to reach out to the global markets. So Japan is a global company. It's selling in all parts of the world, especially in Japan, for a very long time. So it gives us a better understanding of the global market and a reach through their own sales force, as well as their knowledge and relationships in the industry. Also, it's helping us on the technology side, especially on the high-value, high-barrier films. They are the leaders globally, and that is very tied up in line with our effort to also position our specialty products more and more. So we are already working with them on offering some of their products which are niche products at the global level, also to our Indian customer base, as well as working with them on the development side as well. Okay. So wealth of knowledge and experience and a strong win-win combination for both sides.
Okay.
Thank you.
Just follow up on that, if I may. So in terms of the captive sales, I mean, is Topan a very big customer for our BOP? I assume they're the largest.
Japan is a customer of BOPP, okay, and we are working closely with them on the same. Yeah.
So would you be able to share how much of your sales would be to Topan from the state? Like any ballpark that you could give us?
I think that we would refrain at this point. Sure. It's an internal.
Fair. Fair. Okay, thank you so much. One more question. This is more global on the capital deployment plan. So you've just raised 450 crores in the rights issue. So what is the plan to deploy that? And over the next 3 years, how much would be the allocation towards corporate venturing?
Right. I'll pass on to Nipin Kansal, who's our CFO, to take that.
Hi.
Sure.
Currently, what we have raised is close to 450 crores for the rights issue process, and the plan is to deploy close to 350 crores towards our real estate venture, primarily going towards our Max Towers project at Noida, And the 100 crores has been kept to the general corporate purpose. The money which we have raised for the real estate is expected to be deployed in a period of next 6 months to 1 year.
Okay. And do we have any target in terms of corporate venturing? Roughly, what is the capital allocation to that part of the business? The Nika and the Mama Goto kind of transactions?
So currently, in the case of our investment vertical, we currently made 2 investments in a hospitality company called Azure Hospitality, around 70 crores, and another investment in a company, e-commerce company called Nika. Currently, what we are exploring are the opportunities in case we get opportunity to invest in any businesses investments which have adjacencies to our current business lines. As of now, we have not allocated any capital to invest in corporate ventures. This is basically the opportunities which come our way.
Okay, sure. If I may squeeze in a last question, this is on the real estate side. We mentioned that we have an asset-light approach. So could you elaborate? Are we talking about JDAs? Are we talking about, captive land bank of the Max Group that we will partner with?
Yes. So we are talking about all of the above. Our approach is to look at captive land banks that are owned within the group, looking at JDA opportunities, and also looking at distressed assets.
Okay. Any pipeline that you could share, like in terms of JDAs under discussion?
I can share that we have a few, but it will be premature for us to share.
Fair enough. Thank you so much. Thanks. I appreciate the answers.
Thank you.
Thank you. The next question is from the line of Kunal Pavaskar from End Growth Capital. Please go ahead.
Hi, good evening to the management. If you could please share some, some data points on the films business. So specifically, I was looking at understanding what the realizations per ton might be on the specialty side and commodity side within the films, and what might be the breakup at the moment in this quarter.
I'll pass on to Zamnik Jain and Amit Jain of Max Speciality Films to please give some indicative number.
Yeah, Kunal, thanks for the question. So at the macro level, the specialty would be around 40% of our total. And again, we have to keep in mind that, specialty of today becomes commodity of tomorrow. So it's always a moving target or moving number. Again, in terms of the realization, I would really struggle to put a number, not because we don't have one, but again, it's a relative number to our internal benchmark or what we call a specialty. They're probably not as a overall blanket common approach on specialty. So would leave it at point to say that yes, we think whatever is in a higher profit segment is specialty, and right now we're at about 40%, and with the new line coming in and the product that we have in place, definitely that should go upwards, adding to our overall financials for the company.
Okay. Would it be possible to share, contribution numbers for the respective segments, at least for the commodity piece, if possible, which makes up 60% of the sales?
Yeah. Again, as I said, this would be again more at the internal level. So I would probably just keep it internal. Yeah. Thank you.
And the last one was any commentary on the demand supply situation that you see in India and when for whatever exports are being made, how do you see impact of PP prices and the realizations in general?
Yeah, so I can take that, Kunal. Basically, like I mentioned, there has been a bunching of capacity that's happened. So there is a situation of overcapacity in India as we speak. Demand only grows linearly, whereas the supply has grown in a quantum manner in the last 1 year. We believe, having said that, there is strong uptake in demand from the export side of things, primarily because of the rupee being at the levels that they are, and demand, in Europe and in America, a lot of the lines there are very old lines, so there is export demand. So yes, we see pricing to continue to remain under pressure, at least for the next 12 to 14 months.
Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Karthikeyan VK from Suyash Advisors. Please go ahead.
Yeah, hi, good afternoon. Thanks for the opportunity. Sahil, the first question would be to you. Can I understand your involvement in the business and, given that you handle multiple responsibilities in the group, how do you see yourself allocating time across these various entities that you deal with?
Right. So thank you for that. So my involvement at an operating level is 100% to Max Ventures. The way we are structured is that we have a holding company called Max Ventures and operating teams dedicated to run the respective businesses. In this case, we have Max Speciality Films, Max Estates. And my personal role, my role is obviously to work very closely with our operating teams to drive performance and to grow the businesses. At the group level, I'm involved as a director in Max Financial Services and in Max Life Insurance, which does not really take up much of my time other than the statutory board meetings because of the solid team that we have running Max Life and Max Financial.
Interesting. The second question would be this, even if I look at your existing Max Estates pipeline, right, it seems that you would require further capital sooner than later. And whatever ballpark calculations one can do on the rental yields here, it seems like you would require new capital sooner than later. Can you take us through how you see the funding for these new initiatives? I mean, Max House in particular.
Yeah. So Max House, we have the funding as a result of the rights issue already.
Correct.
And
Max Towers, yes.
After Max Towers and Max House, because both of these are primarily funded through equity, we will have a significant headroom through the LRD opportunity to do that and to grow this forward.
Right. So one question, in terms of value creation, if I assume a cap rate of, say, about 9% and at 100 rupees plus, we're talking about, 72 to 75 crores of rental income annually. And 800 crores of value. Am I getting this right? The amount of capital deployed in this is quite substantial. Therefore, I'm asking you this question. How should one think about, how you think about capital allocation? Could you
let Nitin answer that, please, our CFO.
Hi, Karthikeyan. So,
yeah, hi.
Value creation, our strategy in terms of real estate value creation is currently our projects are majorly funded by equity and creating only grade A marquee assets the way we look at it. In terms of the capital and the capitalization of these assets would be at a significant premium as compared to the 9% yield which you're talking about. And our number would be more in the range of 7.5% going forward. We are being capital accretive to the business.
Okay. Right. Yes. So one additional question, Sahil, if you would care to answer, which is, for example, if an investment opportunity comes up in Max I or in Max Estates, or rather an opportunity that can be, addressed by either of these, but the group itself has substantial resources. The promoter group also has substantial resources. So in terms of how a particular opportunity gets allocated, what's the thinking that's guiding this particular process?
So it's a focused question. Anything to do with real estate, we are going to be doing in Max Estates. With respect to what we can do in manufacturing or allied opportunities, we would do in Max Speciality Films. And if there is an investment to be made where we believe that we can create value from partnering it from an investment perspective, we'll do it through Max Investments or Max I. So it's quite clear there. Each of these are quite focused in what they do.
You say, can partner through the investment mode. Can you explain what that means?
So, to Nitin's point, what we were saying is that let's say there is an opportunity of a real estate tech startup company, and we believe that there is a lot of innovation in real estate tech. If there's a small stake that we need to take in that company, we would get our investment arm Max I to be able to do that.
But an allocation between, say, Max Ventures and the Max Group, say the promoter group of the Max Group as a whole, how exactly would that allocation happen, assuming, is there a way one should think about?
There is no conflict at all. Anything to do with real estate we are doing, in Max Estates and in Max Ventures. So there is no conflict as such with the promoter group.
Perfect. As in all allocation will be done to this entity itself.
Absolutely.
Perfect. Sounds great. Thanks so much for answering my questions.
In fact, just to add, there is an opportunity there rather than a conflict because the promoter has obviously a large pool of assets. in real estate, we may leverage on those to do some sort of JDAs and, or things like that, which in a sense, going back to the previous person's question, is that, that can be relatively asset light for Max Estate. So in fact, that's an opportunity and not a conflict.
Perfect. No, I just wanted to clarify. Much gratified to hear this. Thank you so much.
Thank you. The next question is from the line of Mahentesh M. from Finquest Securities. Please go ahead.
Good evening, sir. I had a few questions here. Sir, just reading somewhere that the spread of the film business is slightly better now, or maybe it's going to improve going ahead. What is seeing on ground, sir? Hello?
Yes, yeah. Sorry, could you repeat the question, please?
I mean the spread in terms of the selling price and the raw material spread in the film business.
Right. Like I said, I think that the film business is going to, from a pricing perspective, continue to be under pressure in our estimate for the next 12 to 14 months because of the bunching of capacities. If it does get better before that, we'd be delighted.
So you are any lowering of raw material prices for your film business?
No, the raw material price increase or decrease is always passed on to the end consumer in a sense.
Okay.
But what is a key factor here is the supply demand of the industry. And like I mentioned, there's a lot of supply that's come on at this particular time. So thus, there is a margin compression. However, like I said, after 12 to 14 months, we don't see any new additional capacity coming on stream as of now. So, and there is a certain lead time for when a capacity is announced and when it's put in place. So we believe that in 12 to 14 months, it should get better.
I mean, in the next 12 to 14 months, is there any capacity coming up, or nothing is there of your knowledge?
We are not aware of any such capacity coming out in the near future right now. And also for us, with our new line, there are more efficiencies and more interesting products that we are looking to develop from a specialty range. So we are hopeful that they will drive our contributions along with the macroeconomic, margin expansion after 12 to 14.
So can you just share some numbers on the demand supply? Like, for example, what is the capacity now and what is the demand in terms of square meters or something like that? Or if you have any industry numbers?
I may not have the numbers offhand. I'll see if my colleagues in Max Specialty Films have Ramik or Amit. Would you like to take that?
Yeah, I can. This is Ramik. I can take a shot at it. Again, I think the overall demand, what we see on a weight basis is roughly about 30 to 35. That's around 34,000 tons per month. This is including the commodity and the specialty segment, what we call. And at this time, I would say that the supply demand would be about 75% in that ballpark range. And I think, as Sahil said, we're not aware of any more supply coming on board, and industry is probably growing at around 10%.
Okay. Then coming to the rupee depreciation, you were just mentioning about the strong exports. And since the rupee has depreciated much more now of late, would you expect more exports now going ahead?
I think we are open to all opportunities, and so we have seen export go up, and whenever there is a competitive opportunity, whether it is an export or domestic, we are open to it. We balance it with regards to the credit cycle period, the lead time. Directionally, I would say yes, export seems encouraging in pockets, and again, penetration of the specialized products that we have, we think it should be a number which should go up directionally.
So what's your current export contribution, sir? Top line, and the revenue breakup?
Right. Okay, in terms of revenue, right now it would be a small double-digit number at this point of time in terms of our total sale.
Oh, is it? Okay. Sir, you were mentioning about this BOP, some thing on that. Can you just throw some light on that? Any initial address? What's it about?
So, bioclay polyethylene, and we have been working on it for about a year plus. And it's something that I think is again the first in the industry. The idea is to how it can replace the polyethylene portion and how it can be now we can make it and couple it with the BOPP segment. So it's a product which we definitely feel is one of the innovations from our stable here, and we should be able to add customers with this.
Okay. So you also mentioned about this plastic regulation benefiting you. Can you just throw some light on how it will benefit there?
Sure. I think one is on the product side and one is on the process side of converting the material from waste to energy. So on the product side where we take a technology position, one is to be able to have a product having the same family of chemical on the plastic polymers. So that is where BOPP today, we have in our product range all features that a customer looks for, whereby earlier there would be different families of polymers used. Now BOPP can serve all the needs, and thereby it could be a homopolymer family, and thereby it is definitely recycled and reused thereafter. That's one. Aluminum foil has been one area which has been used for its high barrier property. There again we have products in BOPP stable which can replace, and we have successfully done that. So on the product side again with transparent high barriers or the innovative features that the customer look for, our family of BOPP products can meet all the customer needs. So that is one strong opportunity for us. Given our technology and product development and innovation approach, we are working very closely with all the brands to align with their recyclable needs and with regards to how they would want to evolve and how they're working closely on their packaging style. So as I said, BOPE is one more area, and also in the process side where we're working on waste, creating the energy out of the waste, and that's another leg of the recyclability opportunity, and ultimately be able to offer value to our customer.
So energy out of waste means you didn't get you there?
No, so once you collect the plastic post-usage, and then how do you recycle it? So one is, of course, people talk about landfill and burning it, but also how do you utilize it to create energy and better utilization and output of that plastic. So we collect it, and then, well, that's where we're working on to innovate further along with various partners to create energy, whether it could be diesel or furnace oil or gas.
Okay.
Of course, we recycle what we can into the pellet form, into the pellets which are then used in the plastic, again mixed with the original plastic granules.
Okay, sir. Okay. So I had a couple of questions on the real estate front. Like in the Max Towers will you be leasing all the 6 lakh square feet going in, or something will be sold or something like that?
No, we don't. This is Arjunjeet. We don't intend to sell any of it. We intend to lease it out.
Okay. And what is the problem? I mean, what's the timeline, sir? I mean, you mentioned that it will be completed by December. So the leasing might happen in 1 year, according to you, I mean, seeing the market there.
So, like I mentioned, I think the intention for us is that we wanted to lease it out once the project is completed so we can see maximum value in terms of our ability to lease it out and to see the demand that we are seeing. We are seeing some amount of demand already. We are hopeful that, we'll transact when we feel that the pricing is appropriate, which reflects what we've sort of created over there. So I think that, it could take 1 year, it could take a little bit longer also, wherever we feel is appropriate to capture the maximum value for the asset.
But seeing the demand, I mean, there, and the demand sort of scenario, just want to get an idea, like by when you can lease it out or something like that. It's broadly, I mean, not it's difficult, I agree.
I think, as I mentioned, it's difficult for me to give an estimate also because I think that the Noida market has not seen an asset such as this. I think it is a clear outlier. So this is a sort of first of its kind for the market, which is why it's a little bit more difficult to give you an estimate beyond what I've shared.
So outlier in what sense, sir? Like
outlier in the sense of the specification of the building, in terms of the design of the building, in terms of the location of the building. It's treated more as South Delhi and less as Noida. So there's a little bit of market education that we also have to do. In those respects, it is an outlier.
Okay. So also there's a project on the senior living, this thing. What's happening on that?
Senior living is part of Max India, not part of Max Ventures.
Oh, it's not? Okay.
It's part of, it's a company called Antara Senior Living. That is a subsidiary of Max India.
Okay, that's in real estate is part of this. I thought maybe it's this thing. So, okay, sir. Thank you very much.
Thank you. In order to ensure that the management is able to address questions from all the participants in the queue, we request the participants to please limit their questions up to 2. Should you have a follow-up question, we request you to rejoin the queue. We move to the next question from the line of Ritesh Paladia from Girik Capital. Please go ahead.
Thanks for the opportunity. So on your investment side, what would be the ticket size of each investment, and any domain you have marked out where you would do the maximum investment? If you can give some idea on that, that would be helpful.
It is completely opportunistic. We don't have an idea of, and like I said, it's the strategy is to be real estate enabled and investments that enable real estate businesses. So at this stage, we don't have an indication of what the ticket size could be. It could be small, it could be a little bit larger, but we don't have an idea yet.
So henceforth, there is nothing like Nykaa kind of an acquisition. It would be only related to the real estate.
Yes.
Okay. Second, on the what's happening on the Max Learning? Any commentary on that?
Yeah, so we are at this point not doing anything on our education vertical. We are looking, because as you can imagine, we have a lot on our hands. We are focusing on the verticals that we have and thus not doing much on the education piece.
So, is the education as an opportunity we are putting a pause, or it's stopped?
Putting a pause.
Okay. Great. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Naveen Bhutra, an individual investor. Please go ahead.
First of all, congratulations for the first earnings call.
Excuse me, this is the operator. Naveen Bhutra, may be requested to speak closer to the phone. We are unable to hear you. Thank you.
First of all, congratulations to the management team for the first earnings call. You are able to hear my voice?
Yes, we can hear.
Hello.
Yes, thank you, Naveenji, for your good wishes. Please carry on.
Yes. For successful completion of rights issue and the commitment of promoters for increasing the stake by around 10%. So my first question is regarding the management's views about scaling it up to 51% and beyond. So will there be any further dilution, or next year or something like that, we will increase the stake?
We cannot, thank you for the question, Naveenji. At this point, we cannot, comment on that because that's a question you may have to ask the sponsor. But what we can see is that the sponsor intent is very strong in Max Ventures, and that's why the shareholding has increased from 38 to 47%.
Congratulations. And second question is regarding the Max Estates. Recently, regarding the Max House of Land, recently DDA has notified about the 3.5 hectare by paying some penalty. So, will we be utilizing that one?
No, Naveenji, we will not be utilizing the additional 3.5 FAR.
Because they have just recently notified that one around last week of June.
I'm sorry, Naveenji, I was unable to hear your follow-up comment.
No, they have recently notified on the last week of June.
Yes, sir. Yes, but that is related to the TOD policy. To the best of my understanding, with us we have got a 2.25 FAR that has been approved by the DDA, and the building plans have also been approved for that. So that is what we will be utilizing.
Okay. Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Jayakishan Parmar from Angel Broking. Please go ahead.
Yeah, thank you for the opportunity. My question is that in the film segment, specialty film segment, that for FY18 we have reported EBIT margin of around 3.24%, and for Q1 FY19 it is around 4.5%. But when I look at the other listed player, few players are reporting around 6 to 7% EBIT margin. So why it is a gap? Why or what are the steps you are taking to improve this EBIT margin in film segment?
Okay, this is Ravi. Thank you for your question, Jayakishan. So as I said, product mix to push forward the right products, which is what we call specialty in our internal benchmark standards, which is again a high value proposition to the customer. So one is the product mix, which is dynamic. It changes with time. As I said, just bringing in 50 micron plus films to the customer. This is also a unique requirement now with the law, and so we are being able to provide that. So product mix remains dynamic with the customer. That's one. And obviously internal cost improvements and cost controls and cost breakthroughs. And we have been on this journey continuously. So a combined effect of product mix and internal cost control.
Okay.
Yeah.
Or is it possible for you to give guidance for FY19 EBIT margin?
No, I'm sorry. We would not be able to give you a number of that.
Okay. Okay. Last one question on real estate segment, that for Q1 FY19, what is the debt and equity in absolute term in real estate segment?
So as we speak on Q1 FY19, on the real estate front, we had a debt of around 299 crores which we had put in the business. Of this 299 crores, 250 crores was taken off post receipts of the money from the rights issue. As we
okay.
We are sitting the debt of close to 50 crores on the real estate business.
And equity?
We have put in a number of close to 450 crores of equity in the real estate business.
Okay. Okay, thanks. Thanks for reply.
Thank you. The next question is from the line of Gautam Bahal from Orient Capital. Please go ahead.
Hi, thanks for taking my question. A couple of them. First one on Max Estates. One of the previous participants had a similar question. Can you just explain to me again how we think about value creation within Max Estates? I mean, just taking the example of Max Tower, if we expect rental yields of about 7 to 9%, even going forward, our borrowing costs would be, I would assume, around 10%. Just a thought process on how we sort of create value in a model like this.
Yeah, I think that there are 2 points. One is a yield and the other is a cap rate. So let me take that question in 3 parts. First, the way we are looking at it is that there is a certain rental yield that the building will command, which is on the pure play rental. And the difference between the rental yield and the cap rate that our buildings will command is a value creation opportunity for us. That is opportunity 1. The second is there is an opportunity for us to be able to scale by doing LRDs and others, and thus being able to scale through an asset-light approach, given the marquee nature of asset that we have built you can say, in a sense, which is our own company-built asset, capital-heavy approach, so to speak, for the first few assets that we will do. The third model of increasing of our revenue stream is what we call our service arm or our services arm. As you're aware that there is a huge trend of co-working that started where the concept of office space itself is changing, and there are a lot of allied services that we offer within the office space. So, and we are looking to do that through a vertical called Pulse. It's part of our real estate business. And so those are the three primary routes. So I'll just summarize. Number one is a rental yield, which is an arbitrage with the cap rate. The second is through the marquee assets that we produce and the opportunity of capital that we'll have through LRD to look at more asset-light approaches moving forward. And the third is the creation of our service vertical that will help us drive what we can call ancillary revenue or service revenue from each building, given that that none of these buildings are going to be strata sold, so to speak.
And that's very helpful. If you could just give me a little bit of idea of what is the quantum of this ancillary revenues that you are envisaging at the moment?
It's premature to say right now. As you know, our first building is going to get commissioned in December. So we'll have to see. We do believe that this can be quite an exciting play. And we have companies like WeWork doing that globally, for example, through their concept called Powered by We. So this is a scalable and can be significant revenue. But at this point in time, we don't know. It's too new.
Okay, fair enough. I'll ask one more question on the debt front, because given the right after the rights issue, there's a few. It's a bit of uncertainty on the financials at the moment, for me at least. So you said 300 crores of debt in the real estate arm, of which 250 will be paid back by the rights issue. How much is there on the Max Specialty front at the moment?
Currently, as we speak, we have a debt of close to 450 crores on the 450 crores, including working capital and the specialty films front.
Including working capital?
Including working capital, yes.
Okay. And that is that's for the entire 100%, right? Not 50% stake.
That's for the entire 100%, yes. And this includes the entire capitalization of the new line which got commissioned in the month of May. Okay.
And then last one from my side, what is the normalized sort of EBITDA margin we should be thinking of in Max Specialty Films?
So the way we look at it in the case of normalized EBITDA margins, there's a couple of factors which will come into play. As we've recently done economies, we've done an expansion. We expect expansion to happen in margins from the economies of scale from the new line, which is expanded the capacity by 60%. And the second expansion in the margins will happen in the form of the product mix, which we're planning to getting more towards the specialty films from the commodity films which we do currently. And the third, what you're talking about currently, is the market is in a tough situation, as Sahil mentioned. What we expect the margins to get more into normalized mode going forward in next 12 to 14 months. All the three things put together, we expect a significant uptick in the EBITDA margins of the specialty films business to take place.
Okay. But I assume, given you have insight, you're not willing to put a number on it, like a high single digit, something like this?
We are looking at numbers significantly higher than that.
Okay. Okay. Wonderful. Thanks a lot. Looks like an exciting story. Thank you very much.
Thank you. Reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Now, sir, in terms of your Max estate, you mentioned that about 50% of inventory has been sold in your Dehradun project, right?
Yes, that's right.
Yeah, so have 50% of our revenue also been kind of booked basically in our P&L? So how is the scenario that? And in terms of cost as well, how much percentage of cost has already been booked in our P&L?
So, sir, what is happening after the implementation of Ind AS 115, we have been able to book the revenues in the first quarter results only to the extent where the position has been transferred to the buyers.
Okay.
We have not been able to book the revenue of the full 50%, which is less than that. And corresponding costs have also been booked in the books of accounts as of now.
Corresponding cost? Also...
for the said units only.
So how much percentage would have been booked as of now, and what would the quantum be?
Currently, as of now, we have booked the revenue of close on 25% of the units in the first quarter.
In the first quarter, that is about 15 crores?
15 crores, yes.
So, okay, so that's about 25% of your revenue, or what?
Yeah, that's around 25% of our revenues, yes.
Okay, understood. And in terms of your Max Tower, so how's the cost being accounted basically in our P&L, or how's the accounting process for that?
So in terms of Max Towers, currently from the books of accounts perspective, it has been it's being kept as inventory, this being the business of real estate for Max Estates.
Mm-hmm.
It's not been charged to profit and loss as of now.
Okay. So once it gets completed in December, so how will that accounting changes?
So what is happening, once it's capitalized in the month of December, we will have rental income coming as my income from operations, and I will have depreciation and interest costs coming as my expenses.
Depreciation and
depreciation and interest.
Hello?
Yeah, please carry on.
Can you just repeat it?
So what is happening, once my building is capitalized in the month of December, in the current fiscal, we will have the lease rentals coming as my income from operations. I will have depreciation and interest going as an expense in my P&L.
Okay, understood. Sure, that's it from my side. Thank you very much.
Thank you. Reminder to all the participants, to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mahantesh M. from Finquest Securities. Please go ahead.
So just had a follow-up question. Sir, you were able to sell the enhanced capacity in spite of the overcapacity in the industry. Can you just throw some light on how were you able to sell it, and what was the breakup of the new capacity? Was it fully specialty, or was it some commodity and some specialty?
Okay. Thank you for the question. So, yes, I think definite credit to the team to be able to sell this volume in the market. I think one of the large reasons of this growth has been our support based on our years of relationship with our big customers. So some of our strategic long-term customers, they have been more than supportive and willing, and actually worked with us to take up a higher portion of our output. That's one. As part of our plan with the ramp-up of the capacity coming in, we had built up our team as well as our customer base. So we had added lot many new customers, and that successfully resulted in the offtake of the product as well. Also, in terms of the mix, as the machine is ramping up and it ramped up, yes, there is definitely a mix of commodity and specialty. As I said, the specialty portion should definitely be around 50%. And again, the definition of specialty is not a generalized number. It's more of our own standards of how we call it. But yeah, I would say about 50-50 at this point of time.
Sir, and since your new plant was operational, new line was operational in the first half and second half of Q1, can you just throw some light on the utilization or maybe the production in Q1 and how much will be taken to going ahead from the line 5?
So we have been able to, I would say, utilize the line 5, and it's ramped up with every passing day and the different trials we have done. So we have been able to successfully run it to its full capacity. In terms of the overall quantum, I think we have been able to use good on a monthly level. We have been able to reach up to good 70-75%, and should be able to definitely take it much higher. Again, utilization changes with the product mix, etc., based on the weight and the dimension. But yeah, those would be the ballpark numbers.
So I mean, for example, at the end of June to at present, I mean, what's the incremental ramp up?
So I think we're looking at about additional 2,000 tons.
Okay.
Coming out from our line 5.
Okay. I mean, it was around 34,000 tons, right? You mentioned.
Help me understand your question or the number that you're looking for?
No, at the end of June, what was the production from the line 5 and how much has been increased to from that level to at present?
So my line 5 output is close to about 2,000 tons, and that should take my overall capacity. As I said, capacity, it varies because of the tonnage involved and the thickness in the product. So my line 5 output is close to about 2,000 tons in the month of June.
Okay, sir. Okay. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraint, this was the last question. I now hand the conference over to the management for their closing comments. Over to you, sir.
So thank you very much for joining us on this first earnings call, and we thank everybody for their support, particularly in our rights issue and to ensure that it was successfully closed. Thank you, and see you on the next earnings call. Thank you.